This is a demonstration of problem 15.5b, Treasury Stock Cost Method. Before Warburton Corporation engages in the treasury stock transactions listed below, its general ledger reflects, among others, the following account balances. Par value of its stock is $10 per share, and the problem gives us the paid-in capital in excess of par common stock, and retained earnings balances. The instructions state to record the treasury stock transactions given below under the cost method of handling treasury stock and use the FIFO method for purchase-sale purposes. A part states bought 600 shares of treasury stock at $13 per share. So to determine the cost of the shares, we take 600 shares times $13, and that equals $7,800. So to record the transaction, we would debit treasury stock for $7,800 and credit cash for the same amount. B states that we bought 400 shares of treasury stock at $15 per share. Again, we would take 450 shares times $15, and that would give us a total cost of $6,750. So we would debit treasury stock for $6,750 and cash for the same amount. The C portion states that we sold 430 shares of treasury stock at $14 per share. So using the FIFO method, the first shares we bought would be considered to be the first ones that we sold. So of the 430 shares, we're going to say that those came from this group of treasury shares that we purchased at $13 per share. So 430 shares times $13 gives us a cost of $5,590. Since we sold the shares at $14 per share, we received a total of $6,020 minus the cost of $5,590 gives us paid-in capital in excess of cost treasury stock of $430. So we can record the transaction. We would debit cash for the total $6,020. We would credit treasury stock for $5,590, the cost, and we would credit paid-in capital treasury stock for the excess above the cost, or $430. Part D states that we sold 400 shares of treasury stock at $11 per share. So the total proceeds for the sale is $400. 400 shares times $11, or $4,400. To determine the cost of the shares, the 400 shares, we're first going to take the remaining shares from the first 600 that we bought. We sold 430 of those, but we had 170 remaining, and the cost at $13 per share was $2,210. The remaining 230 shares would come from the shares that we purchased at $15 per share. So 230 times 15 is 3,450. So our total cost is $5,660. We only received 4,400, so we have a difference of 1,260. So whenever we receive less than the cost, we first would debit any paid-in capital in excess of cost, treasury stock, which we had $430 from the previous sale, and then the remaining amount, $830, would be debited to retained earnings. So we would record this entry by first debiting cash for $4,400. Then we would debit paid-in capital treasury stock for $430. Then we would debit retained earnings for $830. And then we would credit treasury stock for the total cost, or $5,660. And that is the conclusion of the demonstration for problem 15.5b.